Welcome to Explain the Charts, where we break down the news and the charts to help you make informed trading decisions. Today, September 9th, 2024, we're focusing on Google's Class A stock. Google is currently trading at $150.92, down 4.08% from yesterday's close. Let's start by examining the latest news headlines surrounding Google. Recent Google search results indicate a significant antitrust trial scheduled for September 9th, 2024, focusing on Google's advertising technology practices. The Department of Justice alleges that Google holds a monopoly in the ad tech market and has engaged in anti-competitive practices. Experts predict the trial's outcome could have a significant impact on Google, potentially leading to financial penalties or divestiture of certain ad tech businesses. This legal development is likely weighing on the stock's performance, contributing to the recent decline. In addition, we see the ex-dividend date for Google is September 9th, 2024, with a dividend of 20 cents and a yield of 0.53%. This dividend payment might attract investors seeking income, but it could also cause a temporary dip in price as investors sell shares to claim the dividend. Now, let's move on to analyzing the chart data, starting with the daily chart. Looking at the daily chart, we can see a clear downtrend in GOOGL's price action over the past few months. The stock has experienced several consecutive red candles, indicating persistent selling pressure. The price has broken below its 50-day moving average, a bearish signal suggesting a potential continuation of the downtrend. Additionally, Google has also broken below its 200-day moving average, another bearish indication and a sign of significant selling pressure. If we look at the recent candles, we see a potential bearish engulfing pattern formed in the last two candles. The bearish engulfing pattern signals that the sellers have overcome the buyers, pushing the price down. This pattern suggests that the downtrend might continue in the short term. However, it's crucial to consider the news events when interpreting the charts. The antitrust trial and dividend payment likely contributed to the recent bearish price action. We can see the price action reflected the news events, with a noticeable drop in price around the time the news broke. Let's zoom in on the 1-hour chart to analyze the price action in more detail. The 1-hour chart reveals a volatile price action with a clear downward bias. We see a series of smaller red candles, indicating continued selling pressure. The price is struggling to hold above the previous day's low, suggesting weakness. However, there are some potential support levels to watch out for. The $150 level seems to have provided support in the past, and it could potentially act as a temporary floor. The price has bounced off this level multiple times in recent weeks. Breaking below the $150 level would confirm the continuation of the downtrend and signal a potential move towards further downside. On the other hand, a strong breakout above the previous day's high would indicate potential bullish sentiment and suggest a possible reversal of the current downtrend. Let's now take a look at the 15-minute chart to see if there are any clues about the immediate future of GOOGL's price. The 15-minute chart highlights the high volatility and short-term fluctuations in GOOGL's price. We can see a pattern of short-term swings, making it difficult to predict the immediate direction. The price is trading near its 50-minute moving average, suggesting a possible battle between buyers and sellers. However, there are a few notable price levels to keep an eye on. The $152 level acted as resistance in the past, and it could potentially limit further upside in the short term. A strong breakout above the $152 level would suggest a possible change in sentiment and indicate a potential move towards the next resistance level at $155. Conversely, if the price breaks below the $150 level, it would indicate a continuation of the downward trend and suggest a possible move towards further downside. Overall, the 15-minute chart suggests a volatile price action with a slight bearish bias in the short term. To summarize, Google is facing significant headwinds from the ongoing antitrust trial, which is likely influencing the stock's downward trajectory. The upcoming dividend payment could also contribute to short-term volatility. Technically, the charts indicate a clear downtrend with potential bearish signals. The daily chart shows a break below crucial moving averages, while the 1-hour chart reveals continued selling pressure. The 15-minute chart highlights the volatility and suggests a possible continuation of the downward trend. Key price levels to watch include the $150 support level and the $152 resistance level. A break below $150 would confirm the downtrend and signal further downside, while a strong breakout above $152 would suggest a possible change in sentiment and a move towards the $155 resistance level. Ultimately, the outcome of the antitrust trial will likely have the biggest impact on GOOGL's future. If the trial results in a favorable outcome for Google, the stock could experience a significant rebound. However, if the trial leads to penalties or divestiture, the downtrend might continue in the long term. It's important to stay informed about the legal developments and monitor the chart patterns closely to make informed trading decisions.